Hello and welcome to another live stream with me, Christian Rauchenwald. Okay, we should be live now. With another episode of Daily Market Mastery, to be more specific. I unfortunately still need a minute because my computer decided to require an update right before the stream, so I'll still have to finish up a few things here to get ready to actually have the stream, but I decided to still go live already. I hope you all are having a great week. Actually, let's manage that real quick. Workspaces, that one we can remove. And today we're gonna take a look at Apple stock and use Elliott Wave Theory to try to forecast the future movement of Apple specifically. We've already done it in the past. Now, real quick, so I'm gonna have to use my checklist here because otherwise I forget some of the important things that I have to mention. So did that. Still don't have the chat ready from my side. So a little bit chaotic. Sorry for that. That's that. There we go. That goes there. And with that, we should have the overlay working. Yep, overlay working. Back we go there and up. So that we have. The most important thing, disclaimer at the bottom. Yeah, you can see everything that I share in this live stream / video is my personal opinion and in no way financial or professional advice of any kind. You should always do your own research, consult certified professionals, draw your own conclusions, and make your own decisions. And with that, I think we've got it. So as mentioned, in the stream, as usual, we use Elliott Wave Theory, which is what I'm using to manage my portfolio. If you're wondering how my portfolio is doing or portfolio where, as you can see in the big message on the screen, you can check it out by following the link that's pinned in the chat, or also check out the video description, because I'm a so-called popular investor on eToro, and we're gonna switch there real quick for a second, and hide the message. And as you can see here, we've scrolled down a little bit. I've been doing that for the last 1, 2, 3 years now in May, and have been so far outperforming the markets quite nicely with 30, 35, 45% returns for 2020, 2021, 2022. This year, we are so far a little bit behind track, but if you take a look at my previous performance, you see that higher gains also means higher drawdowns in the months where I'm wrong or simply early. And in this episode, as mentioned, we're going to look at Apple using Elliott Wave Theory, which you can, by the way, if you use the link in the description below, you can read the book for free. That is the Elliott Wave Principle by, I think, H.A. Frost and Robert Prechter are their first names, there's also a link to a one-page cheat sheet that you can use, and yeah, that's pretty much it. Now, as for which tools to use for Elliott Wave Theory, you can, just gonna log in here, you can use TradingView. By the way, all of those things should be linked in the description down below, so you can use TradingView, and there, just use the, I have to zoom out here a little bit and auto-scale that. So you can use the tools in TradingView to label Elliott Wave Theory, although you don't get any kind of feedback if it's right or wrong. You can sign up for Motive Wave, or not Motive Wave, for Wave Basis, which is browser-based and has a few neat features. And after your free trial, if you cancel and don't pay the subscription, you still can use it, but with some restrictions. One thing that's nice about Motive Wave Basis is that it has automatic forecasting. So if I, for example, were to say, okay, this is what I believe is a wave 1, it tells me, okay, wave 2 should go down into this area here. And if I then would say, okay, but this is my wave 2, then it also will tell me where it then expects wave 3 to be, which might be super ridiculous high or not at all visible right now. So where's wave 3 target? We can see it barely up there. So yeah, so it has a few neat features. It's not perfect, but it's really, really great, especially to get started, in my opinion at least, and also to double check certain things. And the kind of like gold standard for Elliott Wave Theory would then be Motive Wave, which looks a little bit outdated, but has a lot of neat features that we can use to properly label and forecast based on Elliott Wave Theory. That said, as mentioned, today we're going to take a look at Apple. Before we do that, as usually, we quickly go through the things that we did in the past and check what changed. And we started the Daily Market Mastery series by looking for a couple of days at the SPX to come up with this labeling where we're still in a waiting position. So basically, if we go higher than 4,195.44, then this would become invalid and we would have to relabel it, although the overall thing would still stand, in my opinion. So we're waiting here for a bigger downturn actually to start, because wave 3 in an impulse wave is always the strongest wave. And yeah, so in the NDX we have the same thing. Although we don't know exactly where wave 2 is, so it could be here. Honestly, don't care that much as long as we're somewhere in that area, and a turnaround before 13,000 or roughly before, could be a little bit higher, but yeah, like a turnaround should happen soon as well. Otherwise, things become invalid and we would have to go back to the drawing board, because like while Elliott Wave Theory is great, I'm like also and I'm fairly good at it, as my track record shows on eToro, but I'm also not saying that I'm always getting it 100% right. Everybody makes mistakes. That's why we also have a disclaimer, and you should obviously do your own research as well. Now, we looked at Shopify, and there actually our Elliott Wave Theory labeling for the long-term outlook, so we're really talking about like a couple of years here, is super bullish, and that's why we doubled our position somewhere in the not so decent past. Looking at this pattern here, like the small one, I would actually probably go as far and say that this is 1, 2, might be 3, 4, but that would be another leading diagonal, so it might not be the case. 1, 2, 3, 4, and now we're in wave 5 territory. So bullish on Shopify. Then we looked at Black Knight Inc., where we have a similar situation, so we're also bullish there. Although we are getting close to having that invalidated, our stop loss is here at 52. If we hit that, then we might have been wrong. But that's okay. Again, we cannot always be right, but the risk-reward ratio is simply too great to pass on that, because we open at 57 or so. So we have like a 10% risk with like more than 100% upside. That's fine. Fort is also something, but here we have like a complete chaos of labeling. We're basically waiting to see if this here turns out as true, or zooming in. So basically we're expecting a little bit more downturn here. Pure coincidence that we would end up exactly on this line, and then from here we would expect it to go up further, or it goes further down and therefore invalidates our labeling again. But yeah, we'll see how that will turn out. So far it looks decent. And then GameStop, as said, I'm bullish on GameStop for multiple reasons, but Elliott Wave Theory might not apply anymore that much here, because so many, like 76 million shares have been directly registered, which reduces the float, which increases volatility, and it means there's like hundreds of thousands of investors in the stock that are not behaving based on mass psychology anymore, but based on simply, I like the stock, I buy, I hold. But yeah, anyway, so I'm bullish there. We just labeled that to basically see if we can. We'll see how that will turns out. Then we have Peloton, where we have two interesting scenarios. We'll see which one is right. So we have like an upwards momentum labeled, where it could look like this. And in which case we would expect a breakout and would basically probably reach 32.77 or 25.95. And a downwards labeling, where based on Kennedy channeling technique, not always, but often we would still hit the so-called base channel that is in the also slightly above $20 range. So where I would say we have like a I don't know, 75% chance that. So if we look on 4 options, option number 1, so 50% for upwards labeling, 50% for downwards labeling, then we would say, okay, we have a 50% chance that that's the case, and we will lock in a profit. Then here for the downwards labeling, I would say we have a 50% chance that even if that's the case, that we still get to see the almost touching of the base channel before we actually go downwards. So which means we would have like a 1 in 4 chance that actually we go down here and we hit our stop loss, which is then a pity. But again, we only have 1% of our portfolio, or 1.3% of our portfolio invested in Peloton, whereas we have, again, the upwards labeling that could work out, that would bring us a profit. And then we have the option that even in the downwards trend, we have the reasonable assumption that often, but not always, that counter trend move, because the trend here would be downwards, would still touch the base channel, again giving us a profit before the stock collapses further. And then last we looked at Domo, And there we actually looked at it because of insider purchases. So since 2018, now in March, it was the first time that insiders actually bought. And as said, while there are many reasons why insiders sell, maybe they need money. So it doesn't have to mean that they actually don't believe in the company's success anymore. There's usually only one reason why they buy, and that is that they believe that the stock will go up. And looking at it, we can label it like this, which would be a long-term outlook that provides us with 20% risk and 1,000% or more than 1,000% potential reward over the next couple of years. And we can also, on a smaller scale, although not as perfectly because we have an almost 100% drawdown here, label it like this, and where we would still have a 100% return with, again, like we had a 20% risk here. So, 25% or 40% risk, sorry. So 40% risk with more than 100% return in this case, and in the long-term outlook even more. Now, as said, with that we can open up a new chart and look for Apple. Either I'm always confusing that it's AAPL, or I'm always usually confusing it with APPL. But there we go. So Apple opened it up. Get then rid of the volume indicator that we don't need. Have to figure out someday how to get that from the default settings removed. Jump on a monthly chart, and then the first thing we do, so as mentioned, my data source, or I didn't mention it yet in this stream, but I'm using Motive Wave Interactive Broker as the data source for Motive Wave, and we might not always have full data. So we have here data starting from 1980, and maybe I should, but I do not know by heart when Apple actually incorporated. So we're gonna check here on trading view as well. If we jump here and we're already on a monthly chart, then we have basically full history. You can see that I already have some old labeling here, and that basically would indicate that we might now be here in a wave 4, making it hard to actually label the whole thing fully. Now let's do that here. We have semi-log scale. The charts also match up in terms of splits properly being accounted for. And now if we let the auto labeling do its magic, we get that, but it says we haven't reached the 0.3 yet. Now, if we use Kennedy channeling technique based on that monthly multi-year outlook here, then what we would expect is that we have a third wave, and then eventually we have a fourth wave that may or may not touch the base channel or the median of the base channel, although the median would be really, really, like ridiculously low, as we can see. So, and the base channel itself would already be ridiculously low. So what we have to do now, and it's going to be actually challenging because we don't have like a distinct downturn here, we would have to figure out what all this is. We're talking about 20 years of history that we are trying to label here. So we're just going to let the auto label do its thing, and it would basically say, hey, that's how it looks like, which is like super, super unlikely because it comes up with like, hey, we have like endless history. It makes it a little bit hard to label, probably, to be honest. So that's going to be a challenging one for me, at least, because if we zoom in further, it's going to be even harder. But basically, if this is a third wave, so the whole thing here, then we should have also, like we should also be able to fit another 1, 2, 3, 4, 5 impulse in there, which ages ago. So I would say, but then we don't have a proper correction here. So if I say this is 1, 2, 3, then it would be a leading diagonal because we're retracing too far. And then that wave 5 would not go till here, but would go till here. Now I probably labeled it as an impulse. That's why it says it's wrong here. Okay, zoom out. Okay, maybe you shouldn't have picked Apple, but we did, and therefore we're gonna roll with it. So if that here is a leading diagonal, so 1, 2, 3, 4, and then again 5 would not be here. Okay. Zoom, no, not zoom, scroll, go forward. So that 5 would not be this, but if 5 would be here, then we would need we would need basically a bigger correction here, so that doesn't check out. If we do not use, yeah, that makes it even harder. We don't use the semilog scale here, I mean, which is also, you don't always have to use semilog to label Elliott Wave Theory. Basically, if we have like small price movements, we could work without semilog, but since we have here from cents, considering splits over the years, to hundreds of dollars, semilog is the way to go. And we're actually going to have, or I actually am going to have a challenge here to label that properly. So, okay, let's go with another approach here. So if I zoom out further, trend line. So like in an impulse wave, very often two of the three waves that go in the trend direction will be very similar. It's clearly not those, because we can already see that that doesn't check out, yeah. And so that's wave 3 will never be the shortest. We already have, if that's a third wave, it will not be the shortest. Using Kennedy channeling technique, we can already say, okay, 1, 2 base channel, that would be the breakout from the base channel, which means also we should be able to label, probably in that case, would turn out like a leading diagonal. So tools, Elliott Wave Theory, leading diagonal in here, although probably not. So we will not fit that in there. So that's probably already our first clue that we're not on the right track. I'm going to double check on. Yeah, we have some discrepancy with our data here. So because as we can see here we would have 1. So here we have 0.0497, and here we actually have 0.11, whereas here in our case we have 0.39, but then here we also, that was then in 98, so our data for 98 seems to be, yeah, so 98 here is higher by a lot. So our low here is 46, and it should be twice that. So it seems like there's some split data not adjusted or not well adjusted. And that's why it's always important to double check your data source, because this here is supposedly or should be higher, which means while motive wave will now tell us, hey, what the heck are you doing? Yeah. Because we are going below wave 2 here, it actually, if we, nope, don't want to have notification, thank you very much. It actually, if we label it like this, 1, 2, 3, 4, 5, checks out as a leading diagonal. And yeah, well, it's hard to, yeah, so like this. And if we look in there, what if it doesn't start here? What if it starts 1, 2, 3, 4, but then it would be wave 5, wave 3 would be the shortest? No, that's not the possibility. And as a corrective pattern, A, B, C, that one checks out, and then we have a 5th wave, and then here wave 2 is a little bit different, so that also checks out. So that one here is wave 1 would theoretically check out with then a simple fast A, B, C correction here. So far so good, which means we would now be in wave 3 and would have to figure out that part. Okay, so like again, like it's gonna warn here because the price here is not right, and we would then have a set A, B, C as a correction down here. And while that's like how far did we go down there according to TradingView? Yeah, so it's much better here, because here we should actually be at 23 cents roughly, whereas in our chart we are here at, and we're looking at the same thing, yeah? So we're looking at April 1st, 23, yeah, not 23, but 2003. And here we are now looking at, where's the stupid date? Yeah, so April 1st, 23. So we should here be at 24 cents, whereas we're here only being shown, okay, it's going to be hard. We're not, I might actually not be able to use motive wave to label this, considering that the data is wrong that we are seeing, 163. So while the current price is right, all our data here is completely wrong. So if we have to stick here to TradingView, then we would probably say that this is 1, 2, 3, 4, 5. So there we have a 1. Then Then we have an ABC corrective pattern. We have a wave 2. Then we have a 1. Yeah, that's one. That's the tricky part here. So do we have, yeah, let's first for now. So we're still in wave 3 here, like 3, 4, 5, and let's get rid of that big labeling here. So in case you're wondering, so just a reminder, like every wave in Elliott wave theory itself subdivides in waves of smaller degree and is itself part of waves of bigger degree. So that 1, 2, 3, 4, 5 here is also wave 1 of a bigger degree. That ABC is wave 2 of a bigger degree, and what we're working out here is now wave 3 of a bigger degree, which technically means, which is very, very interesting, if we can work out the whole thing here, and which is a little bit of pity in terms of the data source. I wonder if I add another chart. Yeah, I don't have, that's local. Didn't have Google set up. I can set up Google maybe as data source, but not sure if we get more data there. Let's do that real quick. So modify. Nope, that was the wrong one. Or advanced. No, that's the. How was that? It's been a while since I set up the whole thing, yeah. So there is a way to edit workspace, but there's also a way to add, would have to create a new workspace. Okay, we're not gonna bother with that, yeah. So to get the sources in there. So if we say this is 1, 2, then using Kennedy channeling technique, we probably are proven wrong really quick, because then we would actually have a base channel like this that would expect a breakout to the top here, which unless we adjust data for dividends, okay, interesting, doesn't change much, or does it? Just moves things up a little bit, okay. Auto scale, always nice. And where do we have the button to turn off logarithmic view? Was looking for it yesterday already. Honestly, not the stream I was hoping to do. I actually expected our data sources to be reasonably accurate. So do we have the, they are logarithmic. Okay, so yeah, like still would indicate that this one is a third wave. So that based on not using logarithmic, we would actually have this one as a clear third wave. Now circling back to logarithmic, if we say that this is our wave 3, so, but that would be wave 3 of a bigger degree, which means we would have to have, God, is that a mess? Yeah, like, so if we circle back here, okay, so, and if we now again say, okay, that's whatever, like 1, so that's our 1, 2, and now we have our wave 3, which may or may not have finished here. I mean, again, logarithmic, yes. Let's move that. Now, if we, yeah, that obviously here we would label it slightly different, but we would still get to a wave 3 breakout here. Then we would here label it 1, 2, 3, 1, 2, 3, 4, 5. Then we would actually expect that right now we are in wave 4 as a corrective pattern. So like dup. So it's like super annoying because do we have Fibonacci extensions here? Fib channel, Fib retracement. The retracement also has the extensions there, yeah. So if we go from here to here, yeah, we don't even scratch the surface. So, God, okay, back to the drawing board. There we go. Okay, so if we label this from the age of dinosaurs, then we probably would end up with this. Okay, and then in terms of channels, oops, used to just drag things on the chart. And then if we duplicate that channel, seems like a lot of potential way down. And here we would be looking for a corrective pattern. So in that one, 1, 2, or 1, 2, 3, 4, or 3, 4, 5, that one would probably check out nicely. That would be from January 19. Do we have anything usable from January 19? Also not, unless we skip the semilog scale. Yeah, then yeah, get rid of this. January 19 would be from here. So if we wrote it here, it also just divides it like this, okay? And decompose one level would actually check out, which would indicate or which would make us believe that that correction is already finished. Yeah, I hate to admit it, but I'm a little bit like, yeah, overwhelmed like right now with like the possible things here, mostly because our data is not accurate in motive wave or from interactive broker in this case, which is like really a bummer. Because looking at this, I do not think, and again, I think our prices are here wrong as well, because here we have that, and that would mean that here we would need to fit another impulse or leading diagonal. So, okay, it says here A, B, C, yeah, so it would need to be 1, 2, 3, 4, 5 or so if we look on weekly. 1, 2, yeah, that doesn't check out, so like 1, 2, 3, 4 would be too big, so it would need to be 1, 2, 3, 4, and that would be wave 5, which would then mean that we only, and that's the leading diagonal, which would then mean that we only have wave A right now, which would mean we're still missing out on wave C, which actually would check out very relatively nicely with, and we also would need to have another 1, 2, 3, 4, 5 that works in there. So yeah, tricky. 1, 2, 3, 4, 5 just doesn't look nice. Okay, I'm honestly, so I'm officially without opinion on Apple. I actually thought we'll be able to actually make a buy or sell decision, but nope. Yeah, which is a little bit of a bummer because I do these streams to obviously show, okay, this is how it's done. But yeah, like it's also the honest thing to do instead of pointing out or instead of insisting on something that I'm not sure of, to simply admit, okay, doesn't work here. Now, people might use that to say Elliott Wave Theory doesn't apply, doesn't work or so. But if you circle back to the first episode where I go a little bit deeper into the basics, the whole thing about Elliott Wave Theory is that it's based on pretty much mass psychology, and as such applies a lot or better to indices, because an index is built based on way more decisions, since it's comprised of multiple stocks, in this case 500 of them. So which means the investors of those 500 stocks, how they decide then influences how the value of the index evolves. Whereas an individual stock, and Apple is for sure one of the popular ones or so, might not always follow the rules of Elliott Wave Theory to the letter, making it harder to always apply. Now, so far, I think we've only had issues with AMD. So there was one episode about AMD where I also wasn't able to come to a conclusion. And now, surprisingly, with Apple, I actually would have thought that with Apple it would be easier. Now, to be fair, if we use the auto labeling, and again, we wrongfully label from January 19 because we assume that's where a new wave started. Yeah, so basically that we have something correction, so like whatever, wave 5 and then ABC, or wave 1 and then wave 2, and that this would actually be a third wave, blah blah blah. So if we do that, then at least with the auto labeling on first glance, it would look like, hey, correction is over. Apple is now in another upwards run and is going to continue that run. Yeah. If we look at the bigger picture like this, it would actually look like, hey, that does not track well as ABC or ABC already done, because we could not fit the requirement. So for that, real quick, gonna switch to the desk cam. As you know, we have our one-page cheat sheet, and there, if you check out the pattern for a zigzag, it subdivides into an impulse or leading diagonal, any corrective pattern for wave B, and an impulse or ending diagonal for wave C, where on top of that, the probability for the leading diagonal is actually relatively low with 7%. Doesn't mean that it will not always often happen, or that it will not happen, just that it most likely should be an impulse wave. Yeah. And if we circle back, we just cannot, I mean, we can label this as 1, 2, 3, 4, 5 as a leading diagonal, but we cannot label this as 1, 2, 3, 4 because that would be a clear violation even as impulse or leading diagonal. Yeah, so it cannot be A, B, C. Yeah, although if we just look on monthly candles, that's what it says, okay, should check out or might check out, but it doesn't. Yeah, which means it's more likely, or on a bigger scale even, so if we assume that the whole thing already ended, so that's our end at like over the years, then it's on a bigger scale even, I'm not saying more likely, but it would also be possible. So if that was the end of a wave 3 and we're now looking at wave 4, that is 1, 2, and we are right now in the progress of developing wave 3, 4, 5, that then in turn will be wave, I don't know where the 5 went. Yeah, so wave A, 5 went here. Okay, so let's find it. Yeah, of the ABC pattern. So which again would indicate, or which then would mean that here is our right now base channel for that 1, 2, 3, 4, 5 movement down, and then we actually would be waiting for a breakout to the bottom. Yeah, and if that's true, then the most likely scenario for on a smaller scale would then be that this one should subdivide into 1, 2, and yeah, 3, 4, 5, although that 5 would then obviously be basically here, so not down like this, but a little bit further dragged out. Not sure if I can mark a few of those things at once. Yep, I can. Can I drag them at once? Okay, I can only drag one. Okay, that doesn't really help. Yeah, but so gonna end this stream for today as usual after the 30-minute mark, sadly without a conclusion. So we're also not gonna save this. We might revisit Apple sooner, or not sooner, we might revisit Apple in the future and take another look. For right now, I will not buy nor will I sell Apple. I think looking at this, I'd be more likely to expect that we have a further downturn coming, also considering that recently they reported, or the decline in their MacBook sales was bigger than competitors' decline in a similar segment and so on. Considering my overall outlook for the economy is not that green or rosy or whatever you want to call it, and considering that inflation is higher, people in the US have record credit card debt and therefore less luxury spending and so on. So I would consider that outlook with we are going down is actually the more accurate one. Yeah, how far down is a different question. Losing another, what would that be? Yeah, it's 40% or so to reach the 100 mark or so. I would not discount that idea, but I'm also not certain enough based on the history, and also that we don't have like accurate data in Motive Wave, which is like a tool that at least provides me with some additional feedback. But yeah, so I'm just gonna call it a day here. Yeah, if you're also using Elliott Wave Theory and you labeled Apple and you have like an idea of like how it is, how it should be, what's your forecast, which wave Apple is currently in, and where it's going from there, feel free to share it in the comment below. I really would appreciate some input. Like, always open for alternative counts and alternative ideas. Other than that, if you yeah, I guess there's not much more to say for today. Unfortunately, we did not come to a conclusion, or I did not come to a conclusion regarding Apple, although the bearish outlook is the one that I think might be the most likely one. This is the last stream for this week, since Fridays are usually without a stream, which means the next one will be on Monday. Make sure to subscribe and check the channel so you don't miss it out. And yeah, that's it. Thank you for tuning in or for watching this as a video. See you then next week with another stream where we pick another stock that hopefully is easier to